the floor of the CME Group, this is Danny Riley from the S&P 500 on this Wednesday, January 6th. As far as what's going on here today, there's a lot going on. And the main highlight of what we're going to be talking about is the VIX. The VIX is trading under $19 right now. It got down to $18.80, and it's just another part of the wheel that shows that not everything is all working at the same time. When the VIX is this low, the markets, the index markets, the stock market in general, options, they tend to be slow too. You add that together with the holiday that we just had and not everybody trading, and what you come up with is a pretty slow market. Markets are slow across the board. As far as what we're seeing on the trading floor today, we've got about 5,000 big S&Ps traded, and if you take out the 150,000 E-minis done in Globex, we've got about 550,000 traded. These are really, really low volumes. I think it's systematic with what's going on in the world right now. People are unsure about where to put their money into the beginning of the year with the stock market up so much. As far as the rest of the floor is concerned, we've got about 60,000 10-year note options traded. That's a little bit above average from what we've been seeing. Things are kind of picking up a little bit. Over in the Eurodollar options, we've got 300,000 traded there. And, you know, gold is up $18. The euro currency is up 44. Crude oil is up $1, and the grains are up steady, kind of steady-ish across the board. Really, the way we see this is that not everybody's trading that, and I think it's evident in the volumes that we're seeing. And as far as like where we think about what we think about the markets, in our equity report that we wrote today, the desk wrote today, we said that we thought, based on last year's performance with the way the markets opened up in the first of the year, the Dow was up 285 points on the first day, but by Wednesday the market had given back most of those gains. What it is, we've reached up into our first resistance level in the S&P, which we've been talking about for 3 or 4 months, which is the 1130, 1133 level. We took that out this morning, but you know what? We don't have that great of a feeling about the markets being up this much and suggesting to be a buyer into these levels. What our call today was to sell rallies, similar to what it was yesterday. We think that the markets are setting up for making some type of short-term high. That doesn't mean that we're bearish. It just means that we think that we're going to retrace a little bit, and then we're going to get back into that back and fill thing where the market's going to need to do that for a couple days in order to go back up. But as far as the rest of the day is concerned, we're still quiet here. Volumes are picking up a little bit, but not the overall trade is still kind of light. One last little thing, I want to point something out. During the credit crisis, the bond market, the 30-year bond here, the electronic bond, which was 1,000 up at every tick, got down to, the bid offer got down to about, you know, it was 8 by 20, 5 by 50, 6 by 35, something like that. The bond market here is showing 500 up. Things have really recovered here on the trading floor, and that's a really, really good indication of it. But also another big indication is, you know, with zero rates, the Eurodollar options the volume over there took a big hit, but it's seemingly coming back to life. 300,000 volume at this time of the day is a good signal. As far as the rest of the day is concerned, we've got the Fed minutes at 1 o'clock. We're still leaning that the market's still a little overdone on the short term, and that's all we've got from Mr. Top Step today. Boom.